Okay, so good morning. Welcome to today's macro snapshot. We are Tuesday, June the 25th, 2024, recording this in the morning just before 7 a.m. Okay, guys, so not a huge amount happening. The market seemed to be basically kind of just waiting for the core PCE, which is at the end of the week, which of course is expected to come in a little soft. What we do have today is Canadian data. You see here the CPI. And apart from that, just looking over the US, we have the conference board, which is at 10 o'clock. That's going to be interesting because one of the things which will give the Fed more confidence to potentially start the cutting cycle is obviously the inflation data, which, as I said, we had the PCE at the end of this week, but also this idea that that they said that the risks are two-sided. They're really focused now on both sides of the mandate. So the employment side, the real economy side, but also the inflation side. So in terms of the real economy and the US consumer, we do get a little bit of survey data today. I would say that anything, let's say below 100, the bond market, specifically the front end of the bond market, the 2-year, the TUA will take that as quite a positive thing because the Fed is looking at that. Apart from that, so let's just have a quick look. Overnight, we got some information coming out of Europe, which was bad for European stocks, at least in the short term. You see here, Airbus shares drop almost 10% after guidance lowered on supply snag. So apparently in the factory in Toulouse, in the south of France, they have pretty good orders. They had been expected to deliver about 800 aircraft by the end of 2024, but then now the number they gave now is 770, so about 30 aircraft less. So that's a bit of a problem. And apparently they're waiting for parts, for seats and all kinds of parts. So if we start looking at a few things, we could start looking at, let's say, the FESX, which is the European equity, the kind of like the Euro Stocks 50. So it's like the blue chips over in Europe. And we can see here down about 60 basis points here. So let's just have a quick look at the chart. But not a huge amount, but just down a little bit. And, that's because Merck also and Airbus, Merck also had some problems with some clinical trials for a cancer treatment. So that's down a little bit, and Airbus. So a little bit of heaviness in the European stocks. In terms of the US stocks, obviously there's been a lot of attention on NVIDIA. We can see that the ES here, the S&P, just up about 20 basis points or so. Just coming off a little bit, but as you guys can see, there's zero technical damage done to this chart. This chart is still incredibly bullish. So even if it were to pull back, let's say to 5,330 down here, there's absolutely no technical damage. It's still making higher highs. It's above all the moving averages. All fibs are being bought. So there's no technical damage to this chart. There's nothing bearish at all about this chart. I mean, NASDAQ, as you can see, there's a similar situation. What has been a thing, though, is that the Russell has been underperforming in general. And we also can see the RSP, which is the equal weight, has been underperforming a little bit. So what we do seem to be seeing is a little bit of rotation. But if we look at NVIDIA, which obviously, as you know, everyone's been very, very focused on, NVIDIA has fallen over the last 2 or 3 days here. We can see in the pre-market up to 120, so up just a little bit. I think it's like about 1.5% or so. So really what's going to be interesting from a technical point of view is when and if NVIDIA, the slide stops or is halted. And the only way to do that, I've drawn some fibs from here, and you can see here that we're at the sort of essentially almost was down to about the 38% or the 50, or even down here, which would be below the 61%. So it's interesting. I don't know where this will stop. We see in the pre-market it's up a little bit, but definitely I think a way of looking at the stocks today will be to see if there's any rotation. We saw yesterday quite a lot of rotation into the energy space, and maybe that was just on the back of the idea that maybe the Magnificent Six tech stocks are a little bit overdone, and so there's some rotation yesterday into other sectors, for example, into the energy. And talking about energy, let's just have a quick look at oil. Then I want to look at a couple of the names over there in energy. Where is oil? Oil is kind of trading at the top of its recent range here, which you can see. So again, at a pretty critical point, though, because we had this sort of uptrend line, which represents, possibly a little bit of resistance, but also we have the Fibonacci retracement. We see here that since the highs in basically the beginning, sort of the middle of April, so we can see here we're now at the 61.8 fib retrace level, which looks like let's call it about $82 on the WTI front contract here. So that's pretty key. It would not surprise me if oil has a little bit of a falling, like a small fall, a bit of a pullback. pullback. And what I'll be looking forward here, that's okay, but the bulls will have to pick it up. So if we look at this shorter term fib, anything would still be bullish. Let's say if it got down to 78.35. But anything below that, you'd want to see the bulls stepping in this zone here. So it would not surprise me if oil comes off a little bit just because it's at a bit of resistance. If it were to push higher, that would, of course, would be very bullish. But again, I'll just be drawing that shorter term fib. And anything, down to about 78.35, as I say, is still relatively bullish. But just talking about the general sort of energy space, if we go across to some of the, whoops, sorry, I need to, oh yeah, that's okay. So if I look at, let's say, for example, you see yesterday we had a lot of green, just looking at something like the oil services ETF, OIH, had a big breakout. So it's a general theme here that a lot of them had a sell-off of, 50 or 61% down to the fib levels and now starting to break out. So you see here a big green candle yesterday advertising that. So interesting to see there. We see Halliburton, Schlumberger, KMI, all of these sort of oil service companies doing very, very well. We also see something like the Oil and Gas Explorer kind of ETF, which is XOP, which is a bit more specific than the XLE. Also in this sort of bottoming channel here, this sort of negative channel starting to break out. You see here at the 61.8, so that's breaking out. And you see that energy as well, XLE, the energy starting to break out. So plenty of names across the oil space. Well, I'm going to say the energy space, but specifically the crude oil space starting to do well. Not bad as well. If we look at something like Chevron also breaking out again on the 61.8, less of a performance in sort of marathon, but you see also ConocoPhillips doing well. We see Phillips 66 not doing so well, Valero. So generally what is happening is that the oil producers are doing much better than the refiners. So you see here Valero again hovering around that 61.8% retracement, but not doing super well. You see ConocoPhillips doing okay, but you see Phillips 66, the refiner, not doing too well. And you see the crack CRAK, oil refiners ETF. So generally here, the oil refiners are underperforming the actual sort of oil companies. And you see here Exxon as well doing pretty well. So that's definitely an interesting space today. I want to see if that's continued that breakout. Other interesting things going on. We have the bond auction today. We have the 2-year auction. So if we look at the 2-year yield, which I'll bring up in a second in the US, we can see that that's been pretty flat because at this point, the yield has come off, 25, 30 basis points since the highs in at the end of May. And the question here is, can this yield go further lower? I would say yes, possibly a little bit. But really what we need to see is evidence from the Fed or at the Fed that the cutting cycle is going to begin. And until and unless we see specific commentary or sort of comments basically from the Fed, I think that this could go a little bit lower in terms of the yield, but not maybe massively, maybe down another 5 or 6, 7 basis points. So I think the auction will go probably, reasonably well today. We also have the 5s and the 7s. Something which is quite interesting has got my attention is that we have maybe a bit of the PCE on Friday. And I'm just wondering whether if we get through this sort of the auction cycle on today, Wednesday, and Thursday, especially today and tomorrow, let's say something like the 5s, could it be that if the 5s sell off a little bit, there's a little bit of a concession going into the auction? Could that be a buy just on the back of leading up to the PCE? And the idea would be that maybe on the PCE, if that spikes, if we get a lower than expected PCE, that could be a nice one. Personally, I've got a couple of calls. We have some call spreads going here. On the ZF, I've bought 106.75 and 3/4 to 107 call spread here, just a small one here. Be further buying if it goes a little bit lower. So yeah, so that's something interesting to be looking for. And again, the idea here, just to recapitulate, is that maybe in the 2 and the 5-year auction, even the 7-year, there could be a bit of a concession, so the price might go down a little bit. But my idea is that maybe the market will buy that back based on the fact that the PCE on Friday morning is the consensus is that will be relatively soft, so there could be a bit of a bounce. So kind of a buy the dip and get out on the spike is sort of the thing there. Other interesting stuff to be looking out for in the FX space, the dollar itself, the dollar index, grinding a little bit higher, but essentially in the last 5 or 6 days hasn't done a huge amount. What is kind of interesting, I just want to draw your attention, guys, to let's say the pound here. I just want to look at something here and show you. If we look at, let's say, the pricing for the uh, let me just get this up. So if you look here, if you look at the US, what's priced by the end of the year is about 47 basis points of cuts by the Fed. You could argue that's not too bad. But what's also interesting, if you look at the UK here, you can see exactly the same, about 48 basis points. So we have a situation where the Bank of England and the Fed are priced for two cuts by the end of the year. But just looking at the economies, it seems to me that the US economy is a little bit stronger. We're getting some data out of the UK, which is a little sort of weakening. We had a hint from the BOA the other day of maybe August cuts could be something happening. So it seems to me that there's a reasonable chance. Just look at the pound here, that the UK pound might weaken a little bit. Compared to the US dollar over the summer, not maybe necessarily immediately, but that's something I'll be looking out for, is a little bit of pound weakness, basically based on the idea that the BOE might cut more than twice, maybe three times by the end of the year. We also have on the July 4th election. We won't get any comments from the BOE until then, but we have a July the 4th election, and that's expected to be a huge victory, a really strong victory by the Labour Party. And they've been saying the right things, but all things considered, that may be a little bit less market friendly than the outgoing Conservatives. So just curious here to keep an eye on the pound and the idea that it may weaken a little bit over the summer, especially if things get resolved in France. That's something to be looking out for. Other thing I'm going to have a look at here is the Canadian dollar. If you look here on the USD CAD, you see that US dollar has weakened a little bit against that. But we had some relatively, I'd say, neutral to dovish comments yesterday by Tiff Macklem, the head of the Bank of Canada, essentially saying that, at the appropriate moment, rate cuts might be sort of a good thing. And so I think the other thing here is that if you look at the CPI, which we have this morning coming out of Canada, as you guys can see, the non-seasonally adjusted month-over-month number is expected to weaken from 50 basis points down to 0.3. And the other numbers, you see the year-over-year down to 2.6 from 2.7. So all in all, keep an eye on that. And the idea here is that the Canadian dollar could weaken a little bit over the next few months. And if we look here at what's priced in for Canada, we can see by the end of the year two cuts. And again, that's probably maybe about right. They probably don't want to be too much more dovish in the US, but maybe even a third cut there. And the point is that we might see the Canadian dollar starting to weaken a little bit. And what I would also say is not only against the US dollar, but maybe in comparison to something like the Australian dollar, or maybe even the New Zealand dollar. So if I look here at, let's say, Aussie CAD, you can see that Aussie has been outperforming, and could that sort of outperformance continue? I think we're at a pretty much of a congested zone here, around about this sort of 91 cent level. I think if we start to see the interest rate diverging between Canada and Australia, Australia seems to have stickier inflation, a slightly more hawkish central bank. I do believe that we can maybe sort of push outwards and upwards here on the Australian dollar. It could maybe even push up towards the 92, 93, 94 level up here. That's kind of an interesting one. Just talking about the Australian dollar as well, something which I'll be looking out for this at the end of this week. We can see here the euro has, after the EU elections, has weakened a little bit and it's just kind of stabilized. We see the euro in general kind of stabilizing. But you've got to ask yourself, there's quite a lot of risk event going into this weekend. And all things considered, for the reasons that I just said, maybe the Australian dollar might sort of outperform the euro, just as long as European risk stays around, at least for another sort of 10 days or so. We'll have to see what happens with the election. So that's definitely something to be looking out here. Also, what I want to look at here, keep an eye on, is the USD Japan. Everyone's keeping an eye on this. Obviously, we're coming up to a pretty key overhead resistance at 160. We're now getting into levels which we haven't had since the mid-80s. And overnight, we had the finance minister Suzuki trying to jawbone the Japanese yen a little bit higher, the USD JPY a little bit lower. Didn't really have too much effect, but we're getting into. I mean, it's a curious one here because some people are saying that the fundamentals still favor the US dollar in terms of the interest rate differentials, in terms of the stronger economy, and we might even see the Japanese yen go up to 170. A lot of people are saying that 163 or 165 is the new line in the sand for the Ministry of Finance over there. You can see in the last 48 hours that the US dollar has weakened just a tad against that. And maybe what will happen if we get a weak PCE this Friday could be a reason for the USD to pull back. But again, medium term, the fundamentals still favor the USD over the JPY. So I think probably the market will be buying that on dips. That's about it, guys. Going a little bit long. I'll talk maybe a bit more tomorrow. Keep your eye just on some of these spreads. Just the spreads between the let's say the French and then the German, and you can see that that they've pulled back a little bit over the last 3 or 4 days on slightly better risk. Also, you can see that Italy, France is pretty stable at this point. But I'm just I'm curious to see once we get to Thursday and Friday, get through the US bond auctions, whether we start to see these spreads going out a little bit more. We'll keep an eye on that. Okay, that's about it for today. We'll keep on talking. Have a great day. Thank you.